Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this tutorial, I will be speaking about liquidity grabs. This is a topic that I got asked to make a tutorial on quite a few times. So let's get right into it. First, I will be speaking about what a liquidity grab is. Then I will be explaining why it often happens. Then I will be explaining how to spot a potential liquidity grab that is about to happen by integrating the COT data into the analysis. And then I will be speaking about also how to potentially use it to your advantage. So let's get into it. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Okay, so first of all, what a liquidity grab is. Now, liquidity grabs are essentially manipulations in the market that happen to go and hunt all the stop losses that are most likely placed at a specific level. For example, what we see right now, and we will be using this throughout the tutorial as an example, what happened right here with Euro USD, that the market went and reached exactly this previous low here and then created a rejection to the upside away from the zone, is a perfect example of a liquidity grab, because what you know is that most traders have all their stop losses below previous swing highs and lows, especially on the daily time frame, but also on the intraday time frames. And if the market goes and triggers all those stop losses and then immediately reverses to the upside, that is essentially a liquidity grab. Now, why does it happen? Liquidity grabs happen because in the market, for every buyer, there needs to be a seller, and for every seller, there needs to be a buyer. So let's say, for example, you are an institution that needs to buy 50 lots of a Euro USD, okay? So you have a 50 lots buy order that you need to fill, okay? Obviously, it's usually much higher than this. I took 50 lots just as a reference. So let's say an institution needs to buy 50 lots. What it needs is that another player in the market needs to have 50 lots, a 50 lots sell order, okay? Because this 50 lots sell order is what this player here, essentially, this is obviously an oversimplification, but is what this player here needs to buy, okay? This market participant wants to buy 50 lots. Someone needs to sell this 50 lots to them. Obviously, this is an oversimplification, but it's just to explain the concept. So for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. So someone that essentially is selling that for the other person to buy, obviously. Now, what happens if there aren't enough people in that specific moment for the order to be filled, okay? It's called filling an order. If there aren't enough sellers that give the possibility to this buyer to actually fill the order, then there is a problem. So what can easily happen is that the market goes and market makers go and create that liquidity by creating a liquidity grab, which is essentially a market manipulation in which stop losses get hunted and triggered. Because if you're looking to buy and other, let's say, retail traders have bought as well during this move to the upside, the probability of their stop loss being below this low are quite high. So if the market then goes and tests this level and it actually triggers all those stop losses, a stop loss order is simply a sell order, because if you bought and the market hits your stop loss, that stop loss takes you out of the trade. So it is essentially a sell order. So many sell orders get triggered all at the same time, creating a massive liquidity event, which gives the possibility for institutions to grab all that liquidity and actually fill their orders. That is why it's called a liquidity grab. So that is essentially the explanation of what a liquidity grab is and why it often happens. Now, the question is, okay, but how can you expect a liquidity grab? So maybe you wait before placing your order if you want to place the order, or maybe you can develop a strategy around the liquidity grab, or even also you short into the liquidity grab with your stop loss at the liquidity area. So essentially, when to expect it. Now, an easy way to potentially expect a potential liquidity grab is using the commitment of traders. Now, this is the data from the non-commercials in the market. So essentially institutions that are in the market just for profit. And if you look at the data for Euro USD, what you can see is that, for example, lately net positions have massively increased. We went from having minus 9.5K net positions, so a negative net positioning with more shorts than longs from an institutional perspective, 173.8K shorts compared to only 164K longs, all the way up to now having a very positive net positioning with 81.4K net positions. So the complete opposite, more longs than shorts. Now, if institutions are increasing their longs, but there has not been a strong increase of price yet, that is a situation in which there is a good probability that we could see a liquidity grab. Because if net positions keep increasing and increasing, but the price is not increasing, it means that not all orders have been placed yet. So that increases the probabilities that what could happen is that we could see a liquidity grab. And after the liquidity grab, that is when all orders are actually placed and the market actually at that point can create the push to the upside after triggering all the stop losses. So if you already know that institutions are building up their positions, but no move has happened yet, there's a good probability to see the market go and test the swing lows and highs just a bit below them in the case of a increase of net positions, or just a bit above in the case of a decrease of net positions. So the complete opposite applies for a short situation, so a sell situation. And at that point, after triggering all the stop losses, at that point, the market can continue higher. So if there is a position building from an institutional perspective with no movement in price yet, there's a good probability that at some point a liquidity grab could happen, either on the higher timeframes or on the lower timeframes. So around this, potential strategies can be built. There are some people that, for example, place their buy order where other people actually place their stop losses. So there are people that buy here and place their stop loss below the low. There are other people that actually are waiting for that manipulation and have their entry levels where other people have their stop losses, which obviously in some case can be a problem, because in many times maybe the liquidity grab will not happen and the market just continues higher. And in that situation, they actually missed out on the move because their entry was not triggered. But in other cases where everybody gets stopped out and then the market moves to their favor, and if you have been in the market long enough, that probably has happened to you and is normal in some occasions that it happens. At that point, people actually that develop strategies around this can benefit from such situations. So there are a lot of different ways in which you can potentially incorporate this into a strategy or even develop a full strategy behind this. Just always remember that when you're looking to develop a strategy, you always have to follow the steps. So first back testing, then forward testing, then only at that point you can start thinking about potentially starting to implement it in a more live trading environment. So always follow the proper steps when it comes to developing a strategy. But I hope that I was able to quickly and to the point explain the concept, because I definitely got a lot of questions about this. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that there is, and I have created this with all the effort that I could put into it. Directly, as soon as you open here the page, you will see a complete video presentation of everything included and how the entire program is structured. In it, you will find all my courses, the VIP Telegram signals, plus the video explanation. So essentially directly copied from my trading account. You will have the possibility to have one-on-one private mentoring directly with me included all in the program. The trading station software with the Telegram notifications integration. So a complete tool giving you everything that you need as a trader when it comes to the software that can assist you with your trading. You will also gain access to the COT data software, which is the one that we used in this analysis. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the checkout process. So definitely looking forward to seeing you on board. The link is in description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.